All right, good morning, traders. Well, obviously, I am not Coach. This is Blake, and Coach actually decided he wanted to take the day off. Oh, he asked if he could take the day off and take off to the beach and get some cool, weather. Which I don't blame him. It is a U.S. holiday today. It's Juneteenth, so happy Juneteenth for those of you that are celebrating. There's a few of you that are in the chat room today because I know that you work at banks and you happen to be in the, Forex Analytics chat room. Yeah, Benedict, I'm actually looking at you, and I was surprised to see you in here this morning. I was like, hey, you got the day off. What are you doing? And I know, the best place to be is obviously in the Forex Analytics chat room, of course. So I'm just harassing you, but I know that actually there's a few of you. Wuju's even out there trading. He trades for a prop firm and he's out trading today. So it's good to have you all here. But like I said, happy Juneteenth. I know it is a holiday, but we've had a lot of activity overnight, and I don't want you guys to miss out on all the volatility that we've seen. I think there's going to be more to come actually today. One of the things about geopolitical risks, I don't think they take a break for the holidays. Now, before I actually move on to the markets and talk a little bit about everything that's happened overnight, bring in Ryan, bring in K-Man, bring in Steve today. I do want to talk about this coming soon page. You can actually see it if you go to the Forex Analytics website. It says something big is coming. Click here to learn more. This is trading analytics, and you can see it's coming soon. And if you are not on our mailing list, get on our mailing list. Put in your name, your email address. Make it a valid email address. Don't put in some random one because you're going to be entered into some prizes that we're going to be giving away and some big prizes too. Ryan, good morning or good afternoon.
Morning, sir.
Hey, you want to tell everybody what we've got brewing over here at Forex Analytics?
No, it's a secret. We're keeping it hush hush. You keep telling everybody. Um, no, if you join the mailing list, we've got a giveaway for the month of June. We're giving away a $25,000 TFP assessment account. That's another reason why you want to put your proper email address in. Otherwise, you won't get notified of that prize. And I don't know what the point is of putting in fake email addresses because you don't get anything anyway. So yeah, we're not going to spam you up with a million sales emails or anything like that. You get our usual weekly newsletter, and when we've got some information on the new trading analytics platform, then you'll be the first to hear about it.
And there'll be, that's an important point. We do have a weekly newsletter. It goes out. It's handwritten. It's not AI generated. It's handwritten by our team over here. Stelios puts a lot of work into it with Steve and putting it together every weekend. But more importantly, we're going to be updating you guys along the way over the next couple months on what we're doing and some of the features that are going to be that are going to be announced. So be the first to know. So get signed up for our email list. Make sure you do that today. So thanks, Ryan. Appreciate that. Speaking of which, Ryan, and now that you're here, man, I thought I was going to wake up to kind of a sleepy day today, but that is not the case. We just had the Bank of England meet. What did you make of the Bank of England decision today? We had some volatility. And what can you brief us on what happened?
Um, yeah, I don't know where the volatility is. Are you on the old 1 minute charts again?
Oh yeah, here
Um,
we go. There we go. 1 minute chart.
there you go. Yeah, well, we were expecting a rate to stay unchanged at 4.25, and that's what it was. Um, the vote, though, was a little bit more dovish. We were expecting it, been saying it on the flow show long enough, particularly after last week's jobs report, that they might turn a little bit more dovish. And we got a 6-3 vote instead of a 7-2 vote to keep rates unchanged. 3 people looking for 25 pip cuts. So that was a little bit of a dovish slant. But otherwise, yeah, the usual stuff: risks, uncertainty, trade, weakness in jobs, but not rolling over, inflation coming down but sticky, wages might come in lower in the latter part of the year, bringing inflation down, blah, 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 and moving on.
All right, all right. Well, Sterling initially dipped. It was, it was obviously it's a 1 minute chart, so I'll take us out to like a 30 minute here. We got an initial dip, and then we actually started to see some dollar weakness come back through the market. Do you think that Sterling has a little bit more oomph in it? I mean, this right here is a big level in my opinion, and it's something that obviously been looking at pretty. Here, let me move this down just a little bit here. Um, a level that I've been looking at pretty carefully, just because this is the 134.50 level, which was the big breakout point. I was a little bummed out, even though I didn't have any sterling exposure. I was a little bummed out when we slipped past it yesterday. I was like, damn, I've been pretty bullish sterling, and even though we've had limited follow through, I've been kind of like. Yeah, I don't know. Maybe it's time to short. I'm glad I didn't, put in a short yesterday. But needless to say, this is a pretty big level. What do you do with it here?
Yeah, 134, 134.50. Bit of a ping pong level. I mean, it's looking more bearish than it has done over the last few weeks. But whether that's just holiday trading or not, we've got the dollar looking a bit more bid around pretty much everywhere at the moment. So you got to factor that in. I think a lot of that is tied to whether you guys are going to go steaming into Iran alongside Israel. I think if that threat is removed, then we may see the dollar softening again, and cable will probably be going back up again. But it's looking at the weak link at the moment if you compare it to euro dollar, as it can be now and again. So obviously euro dollar is a bit firmer, not dipping back as much. Obviously, yeah, that's keeping euro sterling elevated. So yeah, it's the pound's having one of its moments where the light switch has switched, and it's not the darling of the FX world anymore until it changes.
Yeah. Oh, yeah, and this is just so everybody knows, we've had this chart on ForexAnalytix, the euro sterling for since last week. We had this inverted head and shoulder pattern that is basically completed as of yesterday. The euro pound has completed the inverted head and shoulder pattern. So I mean, if you're a long euro sterling going into yesterday, you have to know that, and with the Bank of England today, it was, it's a little dangerous to be on the long side here. But I'm not saying that it can't continue higher. It's just one of those, like, now that you've done it, now that you completed the pattern, you got to be a little bit more cautious. It doesn't necessarily set up for a reversal. People that trade, chart patterns once they complete it as a reversal is too premature, in my opinion, and lack of technical prowess, in my opinion. For the most part. The other thing about the markets that really, caught my attention was the surprise, and this is, getting up in the morning. By the way, one of the things that I do first thing in the morning is I go over here to the live squawk feed in Forex Analytics. It's really beneficial. I do two things in the morning because I get up at just before 4 o'clock, which is in the 3 o'clock hour. And I got about an hour and 15 minutes to kind of get up to speed what happened overnight. So what I do is I, back live squawk up to when I went to bed last night, and then I start reading. And then I listen to the flow show. So if you guys don't listen to Ryan and K-Man, you just go over to X and listen to the recording, or you can go to our YouTube channel, listen to the recording as well. And I listen to these guys, and as I'm listening, I'm scrolling through the headlines, going through our chat room, going backing up a little bit to see what charts they're posting and everything else. That's the best way for me in quicker speed to get caught up. But the one thing that jumped out at me is obviously the Norwegian Central Bank. They did a surprise rate cut. So, K-Man, I want to bring you in real quick.
Righty, hi.
Hey, what's going on? What was the Norwegian Central Bank thinking this morning?
Yeah, well, what were the analysts thinking? I said before, I said I wouldn't. I think they may be a bit stubborn if they keep the rates on hold, and as a matter of fact, then they came in with a bit of a surprise cut. I think it is to give some room. Norwegian kroner has strengthened over the past months,
It's
and so
been
it
crazy too, crazy strong.
gives them a bit of room. There is materially no real need, in my opinion, to keep those yields at 4.5%. They're still at 4.25, so they're still pretty lofty in the G11 space. Um, and yeah, they were saying that they could cut rates a little further, maybe another one or two cuts this year, but that will depend, I think, on what we see in the oil markets. If oil really dumps, it may put downward pressure on Norwegian kroner, and then they are going to be a bit trapped. So I think they took it as an opportunity today to actually coming to a relatively strong Norwegian kroner compared to what we saw the months prior to 2025. And yeah, then they did it. I think it's relatively logic. Now, as I said, going forward, does it completely reverse? They're still at 4.25%. I'm not sure that it's enough to call the end of the Norwegian strength. But yeah, risk is one factor, gas and oil are another factor. Um, yeah, I
Can
mean,
I ask you a question? Because
yeah,
you referenced crude oil, and crude
Brent.
oil has not been a factor as in this, and crude's in red, by the way, on my chart. You guys can see it. So this is the crude was going down, but the Norwegian krona was strengthening. That must have been a result more of dollar weakness, as obviously the euro's,
Yeah,
hell
well,
of a
you got dollar
recovery.
weakness. You got dollar weakness. You got a lot of inflows from the oil fund, and that's because they made, I think, record profits, wasn't it? Not in 2024, because they are very invested in all things equities and stuff. And I think there's been a lot of inflows there as well. We had risk that was doing better, and yeah, that's a result of that. But indeed, Norwegian kroner has strengthened despite oil coming down as well.
As you pointed out, the Norges Central Bank is one of the central banks. There's a few of them out there, from what I understand, that has a sovereign fund that is very, very aggressively invested in the U.S. equity markets. And they're probably one of the biggest holders. Last I read a while back that they were one of the biggest holders of Apple. And Apple's done shit. So as a result, we should just be selling Norwegian krona and being long
Yeah.
US dollar Norwegian krona, right? Right? Just
Uh, yeah, well, maybe.
I'm just kidding. I'm just kidding.
Mm,
All right. Well, thanks for the update, K-Man. I appreciate it. And one of the other things I wanted to highlight, and I'm gonna bring in Steve here because Steve's talked a lot about precious metals. Good morning, Steve. How are you? See if he's in
Good
front of.
morning.
Hey, how you doing? Happy Juneteenth. I forget, by the way, this holiday. I forget it's a holiday until the week comes up. I know it's been a holiday for the last couple years, 3 years, four, I don't know. Anyway, it still doesn't register. So, somebody said, "Oh, we have Juneteenth this week." I'm like, "Wait a second. Wait, that's a holiday," and I totally forgot. So, anyway, I would have been here anyway, but I know that. Thank you guys for being here. Um, you've talked a lot about precious metals. You've been banging the table on platinum ever since we broke out, like way that before this 30% run. You really went on a tangent. You'd be on the Morning Edge, which is our private show, right after this show, talking about platinum. It's made a 30% run since breaking out, but we're coming off a little bit here. Gold came down to the 618 retracement today, but still pretty bullish. And silver obviously hit the 261% extensions coming off now. What do you make of precious metals here, and where's the dip to buy, or do you buy a dip? What are your thoughts?
It's been a few weeks now that the risk reward has tilted in favor of being overweight other metals than gold, particularly platinum and silver, right? And we've seen that paying off, as long as GDX and SIL, which have been doing great. Now it's more than obvious that we've lost a little bit of upside momentum, but overall, I don't think that something materially has changed. Now we might get an opportunity to buy a little bit lower. In case of silver, I think we're going to be extremely lucky if we can get back to 34.50. In case of gold, back to 3300. And in case of platinum, we're going to be lucky to revisit the 1170 area. But don't be even that sure about that, because runaway markets tend to frequently not give the opportunity to join in.
Yeah, I mean these are definitely running away, and I've had a lot of people. I've heard a lot of people. Let me rephrase that. And I remember one in particular, Carly Gardner, who does some work for Jim Cramer. You guys all know Jim Cramer on CNBC. That's the one CNBC show I actually turn off as soon as it comes on every day is his show. Regardless, she does some technical work for him, and she called gold a blow off top a couple of weeks back. Like I think this is just a bullish consolidation.
Yeah,
I mean,
that makes me even more bullish now that now that you put it like that.
Yeah, I mean, when people
Blow
are
off top.
looking at
Okay.
at gold, I mean, yes, it's an accelerated move higher, but that doesn't look bearish to me. I mean, I don't even know what the bearish argument is in gold right now. And now I'm going to ask Ryan and K-Man what that might be here in a second, but just keeping with Steve really fast. This is a pretty bullish move. Yes, this week we've come off a little bit, but I mean, we're I mean, what would be a bearish? Give me a bearish reason I should be selling gold right now, other than it being overbought.
I don't know. I haven't found a reason to be bearish since.
Since the launch of Bitcoin.
I mean, I've been very, very
You've been
bullish
bullish forever. Yes,
gold
yeah.
since the financial crisis of 2007 and 2008, right?
Yeah.
And I still don't see the fundamental macro bearish argument, because all the reasons I had to be bullish back then are either there or they've become even more profound. So I don't know what to say. Good luck to anybody that wants to be bearish. Of course, nothing is going to be moving forever in a straight line, right? At some point, we're going to get either some kind of a prolonged consolidation, after such a huge run higher, or even some kind of a sharp pullback, because these markets usually produce either long-term consolidations or sharp, shorter-lived pullbacks. But overall, if we're talking about a long-term horizon, I think, in 10 years from now, we're going to be having equivalent conversations with precious metals being at a totally, totally different level, much, much higher than they currently are.
Yeah, this is one of those situations like you can't really have an argument for gold at the moment. There is really no bearish argument, is what I'm saying. But maybe you think about like the geopolitical situation. Let's keep our fingers crossed and let's just hope calmer heads prevail, and let's say the Trump administration and President Trump can broker some sort of peace agreement near term. Maybe that gives reason for people to pull the plug on some gold longs, and maybe we see a dip back to 3,000. It gives us some accelerated move where people just start hitting the bid, and then we get a dip like that that's really quick. But I think you got to be
Yeah,
really
for
really.
those that want to be trading these markets on a longer term horizon, you need to keep your eyes open, because these markets tend to produce some amazing long term opportunities. Just a reminder, 18 years ago, gold was 1/12 of the price it has now,
Yeah.
right? And everybody that had eyes and could understand what was happening, right, knew that it was extremely cheap at that moment in time. Extremely cheap. Of
Eh,
course, after
Isn't
having
the
run
Go ahead. Sorry.
from below 300 to 3,400, is gold as cheap as it was back then? No, it isn't. But for example, we've had this conversation a few weeks ago about platinum, because platinum ended up being extremely, extremely cheap, right? Silver a few months ago was also ridiculously cheap. So, these markets, for some reason, tend to lag frequently and tend to respond with a big delay on occasion. And these are the long-term opportunities, right?
Yeah, and you look at, previous moves, Steve was backing me up 18 years ago. I mean, we have triangle consolidations. They look like maybe some sort of blow off top. Then we just consolidate, breakout. Sometimes you get a little bit of a reversal, but still overall the trend is, going back,
Oh
many
yeah, yeah, it's
years.
undeniable. And to be
Yeah,
honest, that trend is a very clear trend, right? It's
yeah,
the exact opposite of the purchasing power of um,
fiat.
currencies, fiat currencies,
Yep,
right? Because
yep.
that is the exact reverse of the path of our purchasing power using any fiat currency, more or less. Some have done a little bit better, some have done a little bit worse. For example, you want to take the Turkish lira, it would be massively more exacerbated. You want to take something else, it's going to be performing somewhat better,
God, I'm
right?
going long. I'm going long Lira today. Today. I'm
Good
gonna
luck
do it
with that.
today. Today is the day, Steve. Today is
Yes,
the
speaking of which, there will be a time in our lifespan that the Turkish lira is going to be an amazing buying opportunity, right?
after it's lost, I don't know. Let's see, since
At the beginning of the
2008.
financial crisis, if I remember right, it was 1.15 to the dollar, and it's currently, where you're pointing at,
Yeah, this is the European.
approaching 40.
This is the European financial crisis. It's lost 500%.
Yeah, yeah, but go
Oh,
back to the financial crisis of 2007.
oh yeah, I mean, you're talking way down here.
Yeah.
Yeah, that's crazy. Well, one day, Steve, let's all dream. Let's hope it happens in our lifetime. I want to shift gears a little bit and go back to precious metals. And I want to ask Ryan. Ryan, what do you think of precious metals here? I mean, are you would you be buying gold here? Is there any reason to be a seller? Let me a better question.
Yeah, well, it's a bit surprising that we're not higher with, the US apparently just about to step in this bum fight, but maybe the market see it as a limited, short episode. But I think if we do get a headline that the US is joining in, you'd have to see what happens then. Or it could just be a bit of risk reversal, a bit of position squaring because it's a holiday today. No one wants to be caught on the wrong side of peace headlines or something like that. So maybe, yeah, but I don't think anything's changed. Only if you get some of the top side levels like 3,400 resisting again, that might be an encouragement for shorts, but you're only, trading level short term. You're not taking a 6-month view on that. So
Yeah.
anywhere 34.14 is as the potential for becoming resistance and giving you a short trade. But no, it's not something you'd want to sit in for 6 months.
Well, K-Man, you've been a pretty big silver bull. Just and guys, if you don't follow Ryan and K-Man in the trades room, you can just go right over here to the trades room. You can see, there's K-Man, talking about what he's in. Ryan's always, posting right there. You go. He's updates on what he's doing. Right in the trades room, so you can have a running total of what we're doing. You can see what trades I just got in this morning, and yes, I am trading, even though it's Juneteenth. You can see it right here. But Cayman, you've been very, very bullish silver. How do you feel about precious metals up at these levels?
Well, I've been quite bullish both. I didn't trade the platinum, but I've been bullish gold and silver for quite a while. I still keep the silver regardless what happens right now, and I'm even looking on pullbacks to get longer again. Gold is a bit of a different one in the really short term to me, because as Ryan already said, why are we not at fresh highs when the risk is there that the US steps into the conflict in the Middle East as well, and Ukraine is not solved yet either. So I'm a little bit more reluctant on gold right now. But yeah, I mean, give me 3,200 or all over. I'm probably going to step back in, because I do think that it is still among in the not even thinking about 15 years or so, but even for 2025, it's still going to be one of the trades to be in over the course of the year. Also, probably the second half, we're probably going to see it another leg higher. So, but in the meantime, yeah, that if it's not going higher on that Iran-Israel thing, unless they close the Strait of Hormuz, of course, but then I'm probably prefer to be in that silver than in gold right now. And also, as I said, start of the week or end of last week, maybe a bit positioning. People were buying the risk on the Friday. Since then, they wonder what to do with it. So yeah, there is still a chance for more sideways, or even more a bit more correction on gold, and then we will see again.
All right. Oh, thanks, K-Man. Appreciate it. I want to since we have a few minutes, I'll be finding Zach. I'm gonna do the interview today. He knows that Dale took the day off to go take a drive down Sunset Beach or wherever the hell he's going today. He's going to enjoy the and guys, I'll say it again. Dale took off because he wanted to go enjoy the coast, which makes sense because it's freaking hot where he lives and where I am. I mean, it's like 110 degrees over here, so which is near boiling. You can literally fry an egg out on the sidewalk if you want. So I don't blame Dale for taking some time away. But I'm going to find Zach here in a minute. But before I do that, I do want to talk a little bit about this dollar with you guys because, I've been, as of the last week and a half, I'm starting to buy dollars and I'm starting to play it on the long side. I'm not comfortable doing it, but we see the dollar index. We broke higher after the FOMC yesterday. I want to take a brief step back and Ryan, ask you, what was your opinion of the Fed? And did we learn anything new yesterday? I mean, following the Fed decision to keep rates on hold, it was a pretty nice, tight walk from the Fed chair. But did you have any takeaway values from that other than stagflation? That was the first thing that jumped to my mind. I was live on the trading battle yesterday with Chris Pulver, and I was like, that stag. I mean, cut GDP, raise inflation expectations, stagflation. That was the first thing that I said. Did you have any other takeaways other than that?
Well, we gave away the PCE numbers again for next Friday, so that was one thing I took from that. But otherwise, no. I mean, the Fed still see, according to the dots, which Powell said are a load of old crap, and you can make a case for any of the dot plots and pathways. They are still looking at 2 cuts. We've got 4 meetings left, one of which is July, which is going to be a nothing burger. So that leaves 3 meetings to potentially do 2 cuts.
September, there's like 65%, 70% chance of September cut.
Yeah, 71%, 70%. October's 85%. So the window's closing on how long they can kick this can if they want to keep cutting. But on the other side, he's waiting, still waiting. He says uncertainty peaked, it's down but elevated, sentiment's back up but still depressed. The labour market, it may be weakening a little bit, but it's not troubling. So they're still in don't know mode. They don't know which way the economy is going to go. If we get over all these trade deals, get those over the line, do we see a pickup in activity, or are we going to see a lack of that and then the economy softening? So they really don't know. But at some point, we're going to get a trade, because with 3 meetings to go, and if they want to get 2 cuts in, the clock is ticking.
Right. So, but do you think, and K-Man, I'm going to ask you the same question about this. While I go look for Zach really fast. Do you think that the Fed can cut here? I mean, do you think they will? Let me put it that way. I think they want to cut. Do you think they
Yeah,
can?
they want to cut. We were speaking about that. You know, they're one of a few major central banks that have got rates still above 4%, like the Norges who cut, and like the Bank of England who are above. They want rates down. And I've said it since rates started going up. They want rates down. Can they though? And that's the question. And that's where the trade will come in. The market wants them to cut because it hits the dollar on every bad bit of data, as we know. But that will be the trade, because the market's going to go, oh crap, we're not going to get two cuts, and then they're going to have to readjust its pricing, and that's going to be the next trade. So, you know, the dollar could be supported all the way through the summer into the latter part of the year if those expectations change.
Okay, all right, and I want to ask the same question really quick, and Zach is with us, so Zach, welcome. We'll be with you in just 1 second. What do you, K-Man, what do you think the Fed's going to do here? And did you learn anything new from yesterday?
I didn't really learn anything new, but they took away some uncertainty. What was interesting, and I said it on the Flow Show as well, is that in case the trade situation gets resolved, that would take away uncertainty. And he was talking about things not being too inflationary, so that would give them probably a good enough reason to cut. And but the main one, and we will see how that evolves, is to me still the labor market. If for as long as we keep in their projected range, which is, what is it, 3.8, 4.4, 3.9, 4.4
Yeah.
percent, there should not be any urgency. But it's not going to take a full percentage higher in the labor market to have them cut. I think the labor market is something that is going to be more and more important. Get to 4.5. I think it may already be enough to pull the trigger.
Okay, and yeah, and I do think that you know they are obviously a little concerned with, you know, based on Powell's comments yesterday. Very, I mean, it's starting to become more of a concern, the labor market. So great points. Hey Steve, Steve already left. Damn it. All right. Well, let me just make sure I mention this really quick once again. If you guys go to Forex Analytics, click here right in the very middle, and make sure you sign up for our newsletter. If you want to know about what's coming with trading analytics and you want to win a trader funding program assessment, put in your name, email address. You'll get our weekly newsletter. You'll be updated first as we get closer to our launch. And we have some very big things coming. And I'm going to just tell everybody right now, if you're a current subscriber of Forex Analytics, which many of you are that are listening in, everything that we're bringing to you is going to be super value packed, and things are going to change for you in a good way from a pricing point of view, from the feature sets, everything that we've got coming. But you guys know we're trying to keep it all under wraps. And for those of you that are new, you guys are going to be like absolutely floored. So, you know, put in your information here, get notified, get involved with our sweepstakes that we're going to be that are going to be ongoing for the very near future. Ryan, any last minute comments before we go?
No, have a good holiday.
All right, yeah. Is today a holiday? I guess it is. It is. All right. If you say so. All right. Thanks, Ryan. K-Man, any last minute thoughts here, buddy?
Enjoy Juneteenth, because we are not yet there. We are still slaves.
All right, guys. Hey, thank you guys for the Flow Show this morning, and make sure you guys are listening into Ryan and K-Man every single morning. I do. As soon as I get up at 3 in the morning, it's what I do. I listen to those guys so I can get caught up and read this live squawk feed, because that's the best thing for me to do every day. Get up to speed quick. So thanks, guys. And let's bring in Mr. Zach Mans. Zach, good morning. How are you today?
Good morning, Blake. This is actually the second time that I've been on with you that Dale's been out. So
you know what? He likes to duck out every once in a while, and we gotta give him a break since he wanted to drive off to the sunny California coast and get out of the heat from Central California. So hey, it's good to see you again.
Good to see you. It's so there's a little bit of confusion because Juneteenth also creeps up on me that I don't remember that it's a market holiday until the week of. And back in March when Dale asked me to be on again, he said Friday the 19th. So I messaged him yesterday. I said, "Did you mean Friday the 20th or did you mean Thursday the 19th when the market's actually closed?" Said I'm fine either way. Just let me know. So happy to be here.
Well, glad you're here. And this is a great day to get caught up anyway, just because obviously there's some shit going on. We have some little rocky road ahead with all the geopolitical heebie-jeeba going on, and you even have futures open this morning, drifting lower. You got European indices that are looking a little uh little cautious here with the DAX back below the breakout point, approaching a 24% retracement. I'm going to turn the charts over to you here in a second, but I want to ask you this real quick. What do you make of the current state of where we're at, and what's your view of, generally speaking, of the market overall?
So, I mean, I think what we've talked about the last several times I've been on with you guys is the overall risk skew that in terms of larger magnitude moves off of 2009 lows and even off of the COVID lows, we're getting up into some pretty thin air, but things still keep holding consolidations and then getting another extension higher. So until some like more serious support breaks, we have to look for where that consolidation, if it's going to hold, is likely to hold. And then what are the better things to play for that next possible extension, but at the same time being mindful of the overall risk skew and saying, okay, if things are going to start to break down, where are they going to rear their head first? And so trying to be first in those areas.
So Zach, let me ask you this question, because you look at equities, and let's back it up a little bit to Liberation Day. Liberation Day obviously scared the shit out of everybody. Only the retail market really were. I was. It was so funny. I was telling the story the other day. I think I was on the Face show. It was maybe a couple of weeks ago. I was like literally in Costco, and I was like the guy that's bringing my $500 Costco order up. He's talking to the lady behind me, and she's like, "Oh, Jim, oh my God, I miss buying Nvidia." This is a mom with like two kids in the cart, and it was like on a Tuesday, I don't know, around noon or so. And I'm sitting here, I'm listening to this lady talk to the guy checking me out at Costco, beeping all my stuff. And he's like, "Yeah, I bought Nvidia and I bought this and bought that." It's so funny because retail, and that's definition of retail right there. And because I had a mom with kids behind me talking about buying, chip stocks as well. They had the balls to get in here, but a lot of hedge fund managers, a lot of institutional traders, they have not, and they've been watching this squeeze higher, and very cautious about putting money to work with obviously the risks that you have with the Trump administration and tariffs and whatnot. So where does that leave the market at this point? I mean, in my view, it leaves us open for a potential squeeze higher to all-time highs, especially if we see some resolution from a geopolitical point of view. What are your thoughts about that as a whole?
I mean, I think, that kind of anecdotal retail, I mean, it's the smaller money. It's that odd lot theory. And it's certainly that it's prevalent, and I think some of those people did buy, but I don't know with how much ammunition they were really able to buy that April dip. I mean, we were looking for a pretty significant bounce from there. And obviously it's extended past that to the point where if you want to turn over, I'll show you.
Yeah, yeah, sure. Yeah, let me let you grab the charts here. Go ahead.
All right. Maybe I can share.
You
There we go.
should.
Yeah,
Let me
maybe.
see. I'll let you know when I see your charts.
That's the win.
Yeah, I see them. They're coming up anyway. Yep, I got it.
So I'm just gonna switch it over to the RSP, the equal weight S&P, because that's one thing that I like to track that kind of smooths out some of the noise. But we were looking for a pretty significant bounce that was very possibly just a B wave and a correction. We'll talk about in a minute how we've gotten high enough that more things are starting to flip in favor of the more bullish alternative that allows us to hold a consolidation and head to a higher high. But I think the way that we move, the air is pretty thin. We're back up against resistance. Things are really starting to like slow down and show some divergence and some lack of any kind of oomph to get further extension. But RSP also particularly hasn't made an actual higher high over what counts best as the third inside that C wave. So it could get a final exhaustion gasp to get closer to a near full retrace of the move down from December that the S&P and the NASDAQ have. But what I've been focusing a lot on in my posts, both on X and to our subscribers, is that there's a lot of charts where they can kind of go both ways, where this move can still be a corrective B wave and the start of something bigger. But if it is going to start a bigger move down, that should fill out as a 1-2 move first and give people a little bit more of a gentleman's entry, similar to what we had back here in at the very beginning of April.
So you think the market's going to be a little bit more forgiving and give us that gentleman's entry?
It might not be as clear and straightforward at the moment, but it'll certainly be at least similar to what we had back on like the NASDAQ. Oops, need to go to the back adjusted. We did get one back here on, I think this was a Fed day on April 2nd, where at the time, the last time I was on with you guys was March 25th, and the more normal pattern for this B wave back here would have been to hold a corrective retrace and then filled out as a wider flat. Instead, that dropped to a nominal lower low, and then it got a corrective bounce right into the Fed, and then a pretty swift reversal. So if you saw that as another lower high and that reversal is something serious, then even though the ideal would have been to hold here and fill out as a wider flat, once this low broke, then you could ride that train all the way down into the April lows and then look for the extremes to set up for a bounce from there. So it's not always as crystal clear right at the moment, which is why we kind of back out and say, look, at the larger degree, we're looking for a move down into the 160 region on RSP, whether that's 5 waves down as wave 1 or an ABC for a B wave. Unless it's a really clean ABC and you get a nice reversal off of here and then can use that as support, it's really not worthwhile putting a lot of faith in that move higher to get to the 190s, 200s as another extension to new all-time highs. But you could certainly play a move like this with a very selective list of some stocks where that looks more probable in order to get some successful follow through there.
Okay, well, let's all hope. Let's all hope that's what happens. But let me ask you this, Zach. Because obviously you're counting waves, and I'm a big Elliottian fan. It's something that I don't practice. I rely on our staff to give me their projections from an Elliott wave point of view. But at what point, because I can, and this is the same thing with Fibonacci's, which has been a staple of my trading since I used to do it with protractors on charts that I printed out.
That's awesome.
In the
Like
90s.
Hill and Meisler.
Yes, Helene and I, we've followed along the same book over the years. So Helene and I know each other quite well. I email with her every day. So, but the reason why I ask you this is because I can make an alternative count for pretty much anything, just as I can draw fib for pretty much every move. So at what point do you shift gears from an Elliott wave point of view where you go, oh shit, that wasn't a third wave. Now we're in a longer, a fifth wave. And, at what point do you shift gears? Because like I said, I can change up my trading plan.
Right. I think
at any time. So
I think the fractal nature of Elliott wave makes it possible that there are alternative ways to count.
Okay.
And so I think part of it is you're looking at the larger context and saying, does what I'm seeing at a smaller degree fit within a larger context? So, you have an ABC consolidation here that could have been a fourth wave. That fourth wave would have been in a larger ending diagonal for this parentheses wave 5 in the SPX. So if you're getting a fifth wave, it's going to be an ABC move. So this is clearly, when you look at the subwaves for this structure off of April, you have a very clear ABC start. Then you have a
Yeah.
consolidation as a B wave, and then we can count 5 waves up into resistance as a C. So that works as the B wave, as a corrective B wave bounce that's so far holding a nominally lower high, but it works just as well as the A wave in that fifth. So then you're saying, okay, which one, those can both be true. And then you look for the points of overlap and you say, okay, if this is the B wave topping, then I should get a 5 wave move down for the wave 1 of that C wave. And I know based on the Fibonacci pinball and the guidelines for Elliott wave that, if my measured move for that C wave takes me down to 4765 or maybe the 1236 down at 4500, then my wave 1 of that should fall somewhere in this 5530 to 5370 region. So I'm looking for that as my zone for a possible 5 wave move down as wave 1. And then you can even break that down even further and say, okay, I know that what the proportions of a wave 1 to that region should look like. That should be a 5 wave move, ideally as an impulse, which would have a wave 1 that maybe comes down to the moving averages and then backtracks and gets a lower high as a wave 2, and then fills out a 3, 4, and a wave 5. So I can say that's what I want to see. But if I'm not seeing that, if I'm seeing something that looks a lot more like a corrective consolidation, there are ways that a more bearish C wave could start as a corrective consolidation, but those aren't always the most reliable. So if I'm seeing something that starts to fill out, even though it's coming down into that region that you can count as wave 1 of the start of something more bearish, if that looks like a clear corrective consolidation, then you play for the potential at least of a decent bounce and a possible move higher with managing your risk accordingly.
Okay, that's a great explanation. Hey, do us a favor. Let's take a look at what you're seeing with precious metals, because we just had a big conversation with my staff here about gold, silver, and that really having a hard time having a macro thesis to be on the short side of metals. How do you see gold right now?
So before we jump into the individual metals, I did want to take a look at the ratio chart that
Okay.
I've been, the gold and silver ratio chart that I've been looking at, which we have this sharp move down after a pretty significant high that can count as 5 waves up. And for most commodities, not, usually excluding precious metals, I think they tend to function more like oscillator charts, where you're not really getting long-term trending moves. You're getting more corrective price structure back and forth between extremes. But even though that's the case, I think this ratio chart happens to count as a 5 wave move up into this extreme. I'm counting with the GLD versus the SLV because I use the continuous futures contracts that I also started using the back adjusted because of where rates are. You get those big price jumps when the futures contracts roll. So that was wreaking havoc on my ratio chart. So I switched over to just using GLD versus SLV. It gives the same view. It just doesn't adjust like that. So we have a corrective looking bounce to a 764 retrace in the ratio that we can count as a B wave, but that has to count as a WXY. So if we're going to look for a more normal C wave, this drop down in favor of silver in the short term could just be a 4th wave, and we could get another push up that favors gold a little bit more than silver. But I would like to see the ratio head down closer to the 60 region versus the 90 region where we are in terms of that ratio. So this chart does still suggest that there's potential for not necessarily for gold and silver. The ratio doesn't imply that gold and silver have to go in different directions. Just the relative strength of silver should outperform gold over the next 12 to 18 months or so. But we can have a little short-term weakness in some silver relative to gold. But the gold chart itself, still long-term pretty bullish.
Yeah.
Short term, I would like to see some more consolidation here as long as we're staying under this recent 3470s high. I think that can be a B wave top in the very short term, and we can be starting to fill out a consolidation. If that consolidation gets closer to the 2900, then I think that increases the probability that that's all of this fourth wave, as opposed to being just an A wave and needing a B and a C of a wider flat.
All
But
right.
then,
Well,
I'm
and
looking for a move up to 4,000 plus for gold.
okay, all right. So that's why I wanted to confirm there. Well, Zach, I just, as we're wrapping things up, I wanted to ask you what do you have right now as a standout? Like you came today and said, I really want to show you guys this.
Um, Probably uranium. We were looking for a bottom in this wave two back in March, and it leaked lower to a little bit deeper than ideal retrace, but it held support. UEC and CCJ held much, much higher relative fib levels for this wave two, and we just got this massive, massive reversal. It's
That's a big,
it's
yeah.
hard to rely on any consolidation inside here for the URA, for the index, as the minor degree wave two. And CCJ especially looks more like 5 waves up. A lot of the individual names also easily count as 5 waves up trying to top. But there are some things that are more clearly hinting at breakouts where we might have to back up and count this as all of the wave two, and this is another smaller degree wave two, and then nested structure that's trying to continue to break out. Very, very long-term bullish uranium. Think this is just the very beginning of a massive primary wave three. And so maybe we're further along in that intermediate parentheses third inside that primary wave three, which can be targeting up to the 80s in URA.
Damn.
Some consolidation in the short term would still be pretty welcome. I look at the UEC chart, and it's right on the cusp of trying to break out again past resistance that would count best as that larger wave one in the start of the same parentheses wave C. So this can be just an alt of this B wave and can still try and fill out a little bit of a wider flat into the normal fib support region. But if it creeps back over the 720, 750 region, then we really have to start giving it some headroom as the breakout in the third of that third, or at least with UEC, maybe it can be a larger version of this wave one. But some of the smaller names like Energy Fuels definitely look like a nested structure. Although the interesting difference about this one that we talk about a lot in our metals mining and agriculture service is that this bottomed in the primary wave two back in April, not the intermediate wave two in the start of primary wave three. So while it can be a more nested structure off of that low and ready for a breakout in the third of a third, that third of a third is inside its larger intermediate degree wave one, where URA, UEC, CCJ, and a lot of others have already done this in the wave two and are starting that third. So there is some room for some differentiation between those names, but incredibly bullish on uranium. And I think we're seeing some good fundamentals for that with the current administration backing up on some of the incentives for wind and solar. Not that those aren't good, valuable parts of a clean energy program, but giving some love to uranium, which there's never in history have we discovered a higher density energy source and then stopped using it in favor of things that weren't as high density.
That's interesting argument there, and yeah, it's a hell of a move, man. Well, Zach, I want to thank you for being here on Juneteenth on your holiday. Hopefully, you get to do a little bit of enjoying of your holiday. What part of the United States are you in?
I'm in Maryland, the opposite side of the pond from you guys, I think. Or not pond,
Yeah,
but
I'm in Scottsdale, and you don't want to be here right now. So, yeah. So, all right. Well, Zach.
the other bright spot that I continue to talk about, I talked about this with Dale back in March. We really like Tesla a lot, and think regardless of what equities might do, Tesla, as long as it's going to hold, ideally the 270 region, and certainly the April lows, is poised for some pretty big things.
All right. Well, maybe now that he's out of Doge, we can see some of that. So, awesome. Zach, tell everybody a little bit about how they can follow you and your work.
You can follow me on X at Zach ZAC Mannes MANNES. Can sign up for a free trial for Stockwaves and the metals mining and agriculture service as part of ElliotWaveTrader.net. Blake can share the links, or I can put it in the chat afterwards or on one of the X posts of the F.A.C.E interview. Also, we started working with Yahoo Finance's community and are sharing some stuff in there, similar to what we post on X for the public at large. Try to be a little bit silly and entertaining at the same time of sharing some actual valuable content.
All right. Well, thanks, Zach, for joining us today. Appreciate you, like I said, appreciate you being here on a holiday. And I'm glad I had the opportunity to sit down with you again, without Dale here. So, all right, guys, that's it for us today. Happy Juneteenth. Zach, thank you so much. And you guys,
Blake, you need to give me a follow also so I can chat with you on DM.
okay, sure thing. We'll do. We'll do. All right, buddy. Have a great one.
Take
And
care.
hey,
Have a great
everybody,
day, everyone.
yeah, have a good holiday. I'll catch you all tomorrow on the Face Show. Remember, there's a lot of shit going on right now, and it's not a time to be. You want to be complacent. So if you are out and about in the markets, make sure you're paying very close attention to the headlines. They are moving the markets. All right, guys. Good luck. Have a safe one, and I'll catch you tomorrow. Ciao.